Hi there. Let's talk about something important for the new year, especially when it comes to money stuff. Iris, which is like Money Boss in the US, has made some changes in the 2024 tax brackets, standard deductions, and again, the changes for tax filers who are above 65 years of age. This might sound boring, but it is very important that we handle money in this year from the beginning and plan our taxes accordingly. Understanding these new rules is like having superpower for your money. In this video, we are going to talk about 2024 tax brackets, which are like groups that decide how much tax you pay. US has a progressive tax system. This means that government decides how much tax you owe by dividing your taxable income into chunks, also known as tax brackets. Each chunk, or you can say the tax bracket, gets taxed at corresponding tax rate, which varies between 10% to 37%. 10% being the lowest to the first tax bracket to 37% being the highest. This progressive tax system also means that people with higher taxable income are subjected to higher federal income tax rates, and people with lower taxable income are subjected to lower tax rates. Before coming to tax brackets and the tax changes, let us understand how your tax brackets would vary according to your tax filing status. So basically, four types of status are there: single filers, head of household, married filing jointly, and married filing. So for all these fours, the tax brackets are different on which these rates are applied. Also, these filing status changes the standard deduction, the amount of standard deduction we are going to get. Where does standard deduction come into play? So, after adding all your incomes, we have gross income. From there, the tax deductible contributions to retirement account, from your personal account, what you make, your HSA, health insurance if you're self-employed, or if you're contributing to your retirement self-employed funded fund retirement accounts. These are adjusted. After these adjustments, you come to adjusted gross income. From this adjusted gross income, standard deduction or itemized deduction, whichever is higher, is deducted. Then we come at taxable income. So if you say not all income which you have earned is subject to taxes. Yes, correct. The standard deduction or itemized deduction which you get, those get reduced from your gross income to come at taxable income. Then these taxable income is broken into chunks, tax brackets, according to your tax filing status, and tax rates are applied. So let me share the screen here to show you how these tax brackets are affecting and influencing our taxable income and tax rates, right? So here we are. Let me share the screen. So here it is. If you see for 2024, the tax bracket is for 0 to 11,600, you have to pay at 10% for single filers. And for married, you have 10% of taxes of 0 to 23,200. So how does this taxable tax brackets work on your taxable income? After adjusted gross income and after deduction of standard deduction or itemized, your 0 to 11,600 would be taxed at 10%. Then 10% would, after 11,600 up to 47,150, you will be taxed at 12%. And from 47,150 to 50,000, you'll be taxed at 22%. So 10% if it's 11,600, so 11,600 into 10% plus what is between 11,600 to 47,150 and so on. So each bracket adds on till you reach to that bracket where your income is taxed. Now, this is the standard deduction, which is compared single. It was in 2023, 13,850, and in 2024, it is 14,600. And for married filing jointly, it was 27,700, and in 24, it is 29,200. So your gross income will be reduced by 29,200. So if we go by our previous example, if your gross income is 50,000 and you're filing jointly, then what will happen? Your 50,000 will reduce by 29,200. So precisely, you only have to pay taxes and 20,800. Then on 20,800, if we go back, 20,800, if you're filing married, filing jointly, you're 0 to 23,200. So you are within 20,000. Your taxable income is 20,800. So you are taxed at 10%. That is your bracket. So you will only pay taxes on 20,800 at the rate of 10% on 20. These have also changed from 23 to 24. So this bracket change, what I'm showing, is for single filers. 0 to 11,000. This is how it is. So let us know if you have any questions. We are happy to answer. So this is the major change. If you have any foregoing questions, we can definitely get on. Right. Sometimes I just want to cover two important things here. Sometimes what happens if, let me stop the show. Sometimes what happens, our income rise is not that much than what taxes has increased. Our income may rise by 10%, but my tax rate may change by 12%. The reason being that because of our income brackets, we have moved on to the higher tax bracket, due to which our taxes have increased more than our increase in income. So here it becomes very important. We know our tax brackets and tax rates, and we know the avenues of tax strategies, which will help us to keep our increase in income and taxes at reasonable rates. Income should always increase unreasonably, but yes, your taxes should have a checked increase growth rate. So this is what we wanted to say. And yes, one more thing what we wanted to highlight was about that standard deduction would also change with the age. If you are 65 or older, your standard deduction would be more as compared to 65 or lesser. So something for senior citizens who are still active and earning for at the age of 65. So let us know if you have any questions and you can contact us. Bye. Have a great day, everyone.